Hey folks, it's Liquid here. It's Friday again, so it's time for another SPY challenge update where I'm trying to beat the S&P 500 over the course of this year. And this week has been pretty smooth except Thursday, yesterday, because this is what the stock market did. It started over here at 9:30, it went up and it was pretty smooth sailing until the last hour, right about 12 o'clock local time or 3 p.m. Eastern. There was some news about inflation and some Fed talk, and the markets did not like that, and we had this massive move downwards. I bought some calls over here in the morning, so at one point I was up about $200, but I was not able to get out of my positions fast enough as it came crashing down, and ultimately I was down $84 for the day after doing all those trades. So what about today, Friday? There is about half an hour left of trading in the day. There's this downward wedge here I made here with this yellow line, and the bottom is this green line. Usually when there's a downward wedge, at the end of that, we get a pop up to the upside. So that's what I was expecting. So what trades did I make today? Well, over here at around 9:50, I noticed that the stock market came down and went up, so it kind of bottomed there. And I always use the MACD here to help me gauge the strength of that move. So you can see here the MACD made a low dip and it bounced up. And when I look to the left, I can see that previously in pre-market trading, the MACD did the same thing, but it was lower. And then previously, the MACD dipped, went up, and that was even lower. So we have consecutively higher lows for the MACD and also higher highs. That shows strength in the market. So I decided to right around, I think over here, after it bounced up and after the MACD crossed back over the signal line, I decided to sell some puts at the 404 level, and I also bought the 403 puts for protection. So my thinking was because the MACD was showing strength, this is on the 5-minute chart. As you can see, the MACD is going upwards. However, the stock market was going downward, then at some point they would have to converge and either the MACD would start heading downwards, or what usually happens is the stock market follows the MACD and it starts going higher. So I traded a credit spread at 404 and 403. And I was thinking if the stock market dropped below 404, or basically my short call was in the money, then I would get out of my position. And it came back down and it bounced at that 404 level, 404.18. So to show you what that trade looks like, I did a lot of trades for other stocks today, but here I only did two for SPY. The first one is this 404 403 bull put. So I bought 10 positions of this strategy. Each one has a 404 put that I sold and I made $80, but I also bought the 403 put at the same time for 53. So the difference between these two is 27, and I have 10 of those, so that's $270. The commission was quite a lot, as you can see. That's almost like 10% of my trade. But I think it's going to be worth it, especially if the market continues to remain high and both of those strike prices at 404 and 403 expire out of the money, which looks like is going to be the case. So for now, I'm just going to leave it. Now, the only other SPY option that I put in today was this one, a 404, 403. It looks the same as the one I just talked about, but this one is expiring on Monday. And I basically sold this one, meaning that I think on Monday, February 20th, the stock market should be higher than it is right now. And I'll explain why that is. But otherwise, these other SPY options, these were put in before. So they're all going to expire out of the money. You can see the market price right now is 0 and 0 for those. So why did I sell a credit spread at the 404 strike level? Is because if I change the chart duration from 5 minutes to 1 hour, and I go look at the futures market, which is ES, S&P 500 futures, I can look down here at the MACD, and basically there's this minus 20 line over here. And generally speaking, if the MACD, which is this blue line, comes down and reverses direction before it reaches this minus 20 line, then the stock market should go up the next couple of days. And that's what's happened this time. It came down, reversed, crossed back over the orange signal line, and you can see it's now heading up. So at least in the short term, which is Monday and possibly Tuesday, I am bullish on the S&P 500. But just to see how this MACD signal works, what happened in the past? Well, over here we can see it came down, crossed over, and what happened to the stock market over the next few days? It went higher, and the MACD also went higher, so that kind of follows that. Moving towards the left, over here, it's kind of the situation, but it did not come down as much. Still, you can see the market went up over the next couple of days. And then over here, there were some drops, and then the MACD went up, and then the market went up. MACD went up, market went up. Same thing over here, it crossed, it did not touch the green line, and that's really important. If it goes under the green line, then that signals weakness and the market could actually go lower. But in this case, it stopped before reaching minus 20, it crossed, moved higher, and the stock market also moved higher. So if I go back far enough, I'm sure we can find a case where this one over here, you can see how it moved below this green line. So it actually went down past minus 30, which is quite low. So that signals bearishness. And what did the stock market do over the next few days? It went down. So that's why the green line here that I've put in is pretty important. And in this case, it did not go below that. It went up. So at least for Monday, maybe Tuesday, I think the market will be heading higher. So I'm just going to wait until the market closes. I'm not going to make any more SPY trades today. All right, it's now 4:33 Eastern time and the market has closed. SPY ended the day at 407.26, which means my full put spreads all expired out of the money. So the two credit spreads I put in today, $27 times 10 and $28 times 2 minus commission gives me $300 in net credit. So I've added it here on Friday. Yesterday, like I mentioned, I lost $84 because of the unexpected move in the market. But ultimately this week, I'm up $528. So that's for week 7, which takes my total premium earned over $3,000. And because I'm starting out with $30,000 as my initial capital, that represents about a 10% return so far over the 7 weeks that I've been doing this. Now, how did the S&P 500 do this week? Pretty much flat, down a little bit, just 40 basis points. So if we look at the graph, the blue line is my return so far, and the purple line is the S&P 500, which has been going down over the last couple of weeks. I have a feeling next week is going to be down as well, but Monday will probably be up, like I mentioned, just because of the short-term strength for the futures indicator. And as usual, I post my trades daily on Twitter. Here's the post from today, and I'm just going to take this one day at a time. Thanks a lot for watching. I hope you guys had a good week as well, and I'll talk to you in the next one.